these wonderful balloons in the background. Well, what are we celebrating? Well, I'm glad to say that it's our 50th show, and I want to thank the viewing audience for sticking with me and trying to take this journey through financial literacy. And I also want to thank all the previous guests that I've had before, and the crew here at El Paso Community College TV. Without them, this show would not be possible. So I want to thank you guys, and later on we'll have a little bit of cake and celebrate this 50th show. I never thought I would get to 50th, and I'm glad we did. And we have a special show for you today. So once again, my name is Nino Gonzalez, and welcome to another episode of Making Sense. And I have the pleasure of having Ray Mendoza here. And Ray, welcome to the show, and thank you for coming by.
Thank you for the invitation.
And especially, a milestone, a 50th show. So
congratulations on your 50th show.
Well, thank you very much. But tell me a little bit about yourself, and what is it that you do here in the El Paso community?
I am the president of RM Mortgage Company, and my profession is mortgages, whether it be FHA, VA, conventional. I also brought some information today regarding reverse mortgages that maybe we can enlighten your viewers throughout the show.
And that's one of the reasons I wanted to bring you in, because I think there's a lot of misconceptions about reverse mortgages. And even though you enlightened me with the history of reverse mortgages, and I didn't even know they were around that long. I saw that the first one was drawn up in 1961. Wow, so they've been in existence for that long. And tell me a little bit of how it first started.
Back in 1961, what happened was that a football player, a coach, passed away, and there was a congressman, I believe, in Congress that wanted to have the widow stay in the home, and they were trying to figure out a way to have her stay there because of her loss of income.
Right.
So they went ahead and extended what is now called a reverse mortgage, so that she could stay in the home.
So that's what kicked off the whole process,
Yes.
and through it, it's gone through several developments, right?
That is correct. It's been evolving. Back in '61, it was through a savings and loan. So it's been coming along all these years. And in 1988, President Reagan signed an official bill to have FHA insure the reverse mortgages.
Wow.
So since '88, the FHA has been insuring mortgages on the reverse side of the mortgage field. Reverse mortgage means that you have to be 62 years old.
Okay.
Your property has to be in good condition. You must live in the house for the rest of your life.
Okay.
And there are certain parameters as to how much money you can access on your equity of your home. So there are some parameters regarding the reverse mortgage.
Well, that's real interesting, and I'm assuming probably this football coach was well known in the community, and is that what kicked it all off? And
Yes, and he was well liked back in '61, and they really says we don't want the widow to go to a nursing home or somewhere else, so let's find a way to keep her in her house. Exactly.
Well, that's great. I wasn't even aware of that. I thought this was fairly new, like back maybe in the late 1990s or so, but I guess you learn something new every day. I didn't even know that they had been in existence this long. But let's talk about El Paso. And in some areas of the nation, I think reverse mortgages are doing better. People are applying for them than here and maybe in Texas or in the El Paso area. How is it going here in El Paso for reverse mortgages?
In El Paso, it's been a slow process, and I think maybe the misconception that people, they talk to somebody that maybe has heard negative things about it, and I think they stop asking about it. So it's been a slow-moving process. It is there for people to use it. It's a financial tool to help them have additional income.
During retirement, correct?
During retirement, they have to be 62 years old, so they can use the tool to supplement their either Social Security or their retirement income.
Okay, and where do you see this the most, where people are taking advantage of reverse mortgages in what areas of the state or the nation?
In the nation, we have the big states of California, Arizona, New York, back in the East Coast, Massachusetts.
Right.
In Texas, Nino, they're Houston and Dallas also.
Right.
We've seen an increase in reverse
Okay, well,
mortgages.
you know, that's why I wanted to bring you in to educate the public a little bit more and maybe have a little bit clearer picture of reverse mortgages, because when I hear about it, and you know, it sort of seems complicated, and I think that's what a lot of people think about, and I think like you mentioned, they hear little tidbits on the news, or they talk to somebody that doesn't really know, and so they step away from the reverse mortgage. So let's talk through the process and what an individual has to go, and what are the benefits.
Okay, let's go ahead and in order for me to be able to get started with an application on a reverse mortgage, Nino, the potential borrower to the reverse mortgage must have a counseling session, which is about an hour and a half counseling session. I give them a list of counselors that are approved to be able to give them
Right.
counseling on the reverse mortgage. So once they take that counseling session, they will get a certificate. They bring me the certificate, and then at that point, I can start the process
Wow.
to be able to get the reverse
Has
mortgage.
this always been in existence, these counseling sessions?
Yes, it's
since
always.
since reverse mortgages started?
That is correct.
And why?
Well, they wanted to make sure that people would get a good understanding as to what the reverse mortgage comprised of, and just the different aspects of it. And I'll give you an example. They can only access 65% of the value. So
Of the appraised value, right?
yeah, there has to be an appraised value. The property has to be in good condition. Also,
So if the property is valued at 100,000, they can only access 60,000.
65,000.
65,000. Okay.
Correct. And they don't access that the first year. They can only access 60% of that.
Okay.
That's a change, a recent change that just happened in the last 3 years.
And why is that?
They were getting all the money at the front.
And they wouldn't have any funds left.
Yeah, the funds would be spent right away.
Wow.
So there's been protections as we spoke. You know, it's been evolving.
Yeah.
And so the government came in and said, well, you know what, let's put some more restrictions, because we're looking at consumers getting all the money at the very onset of the,
Right.
in 2 years they have no money left.
Okay. So let's take a step back. And what is a reverse mortgage? So you know, let's explain to the public, what is it?
Okay, the reverse mortgage works the opposite of what a regular mortgage. On a regular mortgage, you have to make your payments
Right.
every month. On a reverse mortgage, you access your equity and never have to pay the money that you access from the equity.
You never have to pay it back?
Never have to pay it back. You must pay taxes and insurance.
Okay.
Every year they have to be current.
Right.
You must live in the house for the rest of your life. If there's an excruciating circumstance and there's a health issue, you have to let the lender know how long you're going to be away from the home.
Right.
And at times there is circumstances that, you know, you can be out a year or 2 years and not have to pay that mortgage
and
off.
those are some of the disadvantages that I've heard of, is they have to stay in the house for the entirety of the mortgage, and they still have to upkeep those costs, like you mentioned, property insurance, property taxes, and property insurance.
That is correct. The other thing, and they can access this, and it's really, the government created it to help consumers stay in their homes without having to go live in a nursing home or with relatives.
Right.
And also to be able to supplement their retirement or their Social Security. They can access this like a credit line. So when we do the reverse mortgage, we give them 4 or 5 options. How would you like to get the first
money?
Yes. How would
So
you
they
like?
don't have to take it all out at
No.
once, only as needed, right?
That is
and
correct.
They don't have to go to the limit, correct?
No, that is very true. Correct.
Okay.
So there is interest that's going to be charged on the money that they
Right.
borrow, because money is not free. So
Right.
there is interest that's being
That's
charged.
also another, you know, thing that I've heard as a disadvantage, is that since you don't have to pay it back, the interest does accumulate, and
That
that
is
could be quite a bit of an amount based on how much you borrowed,
That is-
correct?
that is correct. That is correct. And some people I have done the reverse mortgage for have elected to pay that interest
Right.
on a monthly basis so that the interest is not accumulating.
Sure.
So that's another option. It's their option to do that.
Right.
Okay.
And another thing that I've heard is usually possibly the interest rates could be higher than a standard mortgage.
Not necessarily. It's around the same interest rate as a regular mortgage. There are adjustable rate mortgages that are also offered that the rates much lower than
Right.
that normal fixed rate, like at 2.5, 2 3/4.
Yes, but
So-
we know what dangers adjustable rate mortgages can pose, correct?
That is correct.
Right.
That is
and,
correct.
and also another thing that I've heard is that the fees are higher than a regular mortgage, correct?
They're a little bit higher than a regular mortgage. That is
Okay.
correct. And the fees are rolled into the initial disbursement that the reverse mortgage borrower can get. So it's not really money that they bring to the table, but it's reduced from the initial money that they get
Wow.
dispersed on.
And let's talk about a situation. What if there's a couple or an individual, and they still owe money on the house? They still have a mortgage, and they've already reached the required age, and so forth. Are they still eligible for a reverse mortgage?
Absolutely, that's a very good point. If they owe, if they're 62 years old and there's a balance on an existing mortgage, they can turn around, use the reverse mortgage, pay the regular mortgage off, and not have to make payments on
Okay.
on that reverse mortgage that was converted to.
And with a reverse mortgage, I think the misconception is that and I guess how you look at it, but that title transfers doesn't stay with the individual.
No, it does stay with the individual. It does not go in the bank's name.
Okay.
So let's just
Well,
say,
whether it's a traditional mortgage or not, it's still within the lender's name because they essentially own it if you don't pay back. Right?
there's a mortgage on it, right? There's a mortgage on it. So let's just say that they pass away,
Right.
and now the heirs have to do something with the reverse mortgage. Either they can convert it to a regular mortgage,
Okay.
or they can sell the home, and whatever the proceeds are left from the sale of the home, the heirs keep that money.
Okay.
So the money does not go to the bank that helped them with the reverse mortgage.
All right. And what if, in a lot of situations, I guess if the property is not willed, I guess it automatically goes to the mortgage company, correct?
Well, they would have to prorate the will and
Probate it.
probate it and figure out who's going to be the guardian of the estate,
Right.
and then try and figure what needs to be.
Go down the lineage, right? And that usually creates a lot of problems. And I've had an attorney here before, and we talked about the importance of wills and probates and how is it necessary to be prepared in those situations. Well, we'll come back and talk a little bit more about reverse mortgages on my 50th show of Making Sense. So stick around. Welcome to the second half of Making Sense, and we've been discussing here with Ray the issue about reverse mortgages and trying to set the facts straight and still talk a little bit about some of the disadvantages. And we talked about that, the interest does accumulate if they don't pay it back, but you did have I think a good advice there that trying and counsel the clients to at least keep up with the interest so the principal is only left, correct?
That is correct.
That's really good, and also that they're still responsible for property taxes and homeowners insurance, correct?
Yes.
And do they have to keep a certain amount of homeowners insurance since it is tied to a reverse mortgage?
Yes, and it depends on the appraisal,
Right.
and the 65% access that they have.
Right.
So they've got to cover at least what the appraised value came in for home insurance.
Okay. And the appraisal, I guess, you work with different appraisers that can go out and
We
appraise
have
the
a
property?
yeah, we have a rotating system that we don't know who's going to be assigned the appraiser, but it's on a rotating basis, so somebody gets selected on the.
Okay, and let's talk about your business here, and how did you get into this, and is there a lot of people doing it here in El Paso, and do you have to have a special credential or courses that you must take?
We have to be licensed, Nino. We have to have a national licensing number to be
Right.
able to do mortgages and also reverse mortgages.
Right.
And this came down from the federal government. So we are trained, and we do continuing education every year
Right.
to be able to renew our license.
And this happened when we had the housing crisis with all that subprime lending.
That is correct.
Okay.
So the guidelines changed, the education requirements changed. So everybody or anybody that's in the mortgage industry now has to have a number assigned to them, and they have to renew.
And I guess that's a searchable database that a consumer can do, right?
Absolutely. Anybody can go in there and say, well, I wonder if he's licensed, and it's online. It
Okay,
can be searched.
but still, does everybody who's licensed do reverse mortgages?
No, it's
No.
we are very few here in El Paso that does reverse mortgages.
And why? It's misunderstood or it's complicated?
It's a little bit complicated, and it's misunderstood, and a lot of people, I think they just shy away from it. I've been in the business for a long time, so it was something new that I said, oh, I'd like to see how these work, and it just fed my appetite, and I said, okay, well, let's keep going.
And like you said, the growth here in El Paso has been slow, and we were talking before the show, and you said that you've been doing this about 2 years, right?
That is correct.
And in those 2 years, you've only had 10 reverse mortgages funded, so it has been a slow process.
Yes. But as word keeps traveling around, you get more referrals and more people that actually come to see me and inquire about it,
Right.
instead of just asking somebody, relative or somebody that maybe will give them a misconception about the reverse mortgage.
Okay.
And I wanted to mention, there are some borrowers or potential borrowers on a reverse mortgage that may have delinquent taxes on their
Right.
property, and they can use the reverse mortgage to get current on their property taxes.
Okay. Well, that's good to know.
Absolutely. And if
Because
they,
those property taxes can accumulate and fall behind really quick.
really quick. And
Right.
from one year to the next, I mean, they might find a solution for 1 year, but the following year it's like, oh my God, taxes are due again. how am I going
I
to
think
pay
we're all
for
in
that?
that situation.
Absolutely.
We know it's coming, but we don't plan. We don't save the money, and then we're there January trying to think, how am I going to pay these property taxes?
I don't want to pay a penalty.
I've been in that situation as well. So it always happens, or we always forget those once a year items that come up, and oops.
All of a sudden they're here again. And I had brought an example of,
Okay. So
of reverse mortgage.
Let's talk about this funding that you did, and how much it was worth, and so forth.
This was an actual funding that took place last year, and we had an appraisal that came in at $82,000.
Okay.
And the older that you are on a reverse mortgage, the more access you can have to your equity.
Oh, really? Okay.
So it goes by age, and if I have a husband and wife, and one is older than the other one, it's going to be based on the older individual.
Okay.
So on this particular case, it was $82,000 sales price. They could access 64% of that,
Okay.
which was about $52,000.
Okay.
From that $52,000, the government limits as to how much you can get on the first draw for the first
I
year.
think you mentioned 60%. Right.
Right. So in this particular case, these people were able to access almost 27,000.
Okay.
And they decided to get access to that, all that
right
money.
away.
They could have said, well, we want to get it $500 a month,
Okay.
or they could say, put it on a line of credit and
And use it as needed.
yes, just like a credit card.
Right.
But don't have to pay it back because it's the equity of your home.
Right. And so what do you mean that the older you are, the more access to the equity you
The
have?
government has a life expectancy table that they more or less, like a life insurance
Sure.
policy.
Yeah.
So they have a life expectancy also for the reverse mortgage, and they say, well, the older you are,
You're going to last so many years.
Yes.
No, really.
Exactly. So that's how they determine, you know, how much money you can get from your equity on your home.
Okay. So the older you are, you can get more or less?
You can get more.
You can get more.
Yes.
Oh, wow.
Yes.
So the percentage can go up.
Only to 65%.
Only to 65. That's the max.
That is correct.
And that's by federal law, correct?
That is correct. It's a federally insured loan, insured by the Federal Housing Administration. So there's guidelines there. It isn't a program that somebody said, well, where did that come from? So it is a federally insured mortgage.
It's funny that you mentioned the life expectancy, because those are determined by actuaries. And
Exactly.
not a lot of people know what an actuary is,
Exactly.
but they work for insurance companies and financial industries, and it's a very well-paid career that not a lot of people know about, and not a lot of people go into. So a bit of career advice here for maybe some college students that are looking to search actuary. Not a very glamorous job, but a well-paid job, and
Sure.
you've got to be good in stats and math. So,
Absolutely. Good
so
point. It was a good point.
so let's talk about what type of credit do I need to get a reverse mortgage?
When the reverse mortgage came out, Nino, it was we did not have to check credit or income.
Okay.
But in the last couple of years, in 2015, FHA says, well, let's put some more
protection.
restrictions and
Right.
protections for the consumer. So we have to check credit, and we have to check income, Social Security or pension that you're getting.
Right.
And they call that financial assessment to make sure that they're going to be able to pay property taxes and home insurance
At least
every
if
year.
there's enough there.
Yes. And if they don't have enough money from their retirement income, they can be paid from the reverse mortgage.
Okay.
So taxes and insurance are very vital. They have to be paid
Have
every
you
year.
seen any reverse mortgages denied because of the credit or income capabilities?
Not the credit or the income. I've had some denials because the value was not there,
Okay.
and maybe they had a balance that they're trying to convert, and they just didn't have enough equity in the
Yeah,
property.
it was an upside down
Right,
loan. Right.
right.
They-
So I've
Okay.
had some cases like that.
And I'm sure that so before credit worthiness was not taken into consideration, and did that create some failures? And,
Yes.
is that why?
Yes.
And maybe that's where it's gotten a bad rap.
Yes, that is absolutely correct. So the government finally stepped in and said, okay, you know what, we're giving all this money all at once,
Right.
and it's being spent in the first 2 years. So let's backtrack here. Let's think of how we can do it and have some more restrictions on it. And that's when the financial assessment came into play, that we have to check credit and income.
Right.
Credit, if you have a 600, a 580 FICO score, you're still going to be good.
And does it affect the interest rate you borrow at?
No,
No?
not on the reverse
Okay,
mortgage.
not on the reverse mortgage.
Property has to be in good condition. I've had some cases where they do have to do some repairs before the reverse mortgage is funded.
And of course, I guess everything has to be up to code too, as
Yes.
well, right?
To FHA guidelines.
Yeah, because that also, sometimes the house might not have had, several things done, and it might not be up to code compliance, correct?
That is correct. And to be able to get it to code compliance also, Nino, what happens is within that reverse mortgage,
They can
Those-
factor that in.
they factor that in and they can use that money
Oh,
to
wow.
be able to bring the house up to code or to fix the property and get the repairs done.
I think just like in other situations, there's abuse. There could be abuse of the system, but it's not just from the people that are offering it. It's also, I think, from the people that are borrowing that, because they're just not educated in financial matters, and like you said, they were just blowing away through the money like nothing.
That is correct. And I think that the counseling has come into play really good. I mean, they have to go through this counseling and bring me the certificate before I can move forward.
And by the way, is this counseling free?
The counseling is $125.
Okay.
They have to pay it up front. Once they take it's like a 2-hour counseling session. They get a certificate.
And do they go like one-on-one with an individual, or is there individuals here that do that?
Not in El Paso, I don't believe there is, but I have a list that I give people. Here's the counseling organizations, nonprofits that will and they can also do it over the phone.
Over the phone or online?
Online.
Okay. So, wow, that's interesting. I'm surprised that, being the size of city that we are, that there's not people offering that counseling here in El Paso.
Yes, and other items while we're on the counseling. I've had organizations, nonprofits, that if the people are really with low income, they will let that counseling fee be collected at closing.
Okay.
Okay, so that's one fee that has to be paid up front, the counseling session, and then the appraisal is the other one that has to be paid up front to be able to have somebody
Okay,
go,
and usually how much does an appraisal run?
$500.
About $500? Okay, all right.
So that's discussed in the initial interview that I do with them.
So let's talk a little bit more about the this funding that you did. So they accessed that amount. How much did you say about?
In this particular case, they accessed almost $27,000.
Almost $27,000, and so they still have how much left that they can?
They've got an additional 21,000.
21,000, and how did they set that up?
They can access that with a line of credit whenever they need it.
Okay.
They can have it sent to them on a monthly basis, $500, $200, whatever they feel is going to help them. Besides their Social Security, they can have it sent to them.
And talking about Social Security, is Social Security factored in any way? Does it affect their Social Security benefits?
It does not affect their Social Security benefits at
Okay.
all. We advise them to contact the Social Security, once they're thinking about making a decision, to make sure that it won't affect it, but Social Security benefits will not be affected. If they're receiving SSI, supplemental income, that might be affected.
Okay.
But the reverse mortgage is money not that they've earned, it's equity in their home, so it doesn't have to do with earnings, so Social Security benefits are not affected.
And I'm sure that as there's been success stories, there's been failure stories. Can you share some of those with us, if possible? A success story that you had, and maybe a funding.
Success stories was we had a couple that came to me. They said, we've got some outstanding debts that we need to pay off, credit cards, and we've been helping our kids, and now we don't know what to do.
Right.
Their house is paid for, so we sat down. We said this might be a financial tool to kind of liquidate the high interest rates. So,
and I'm sure the failure stories. I think quite all those safeguards have been put in place. Well, the time has flown by, and I want to thank you for coming by and celebrating our 50th show. And wow, we even have a cake here. So
congratulations.
Let's bring that in and let's do a little bit of celebration. And wow, thank you very much. And thank you for taking care of this, my wife, and thank you very much. She's been as much part of the show because sometimes she helps me with some of the topics. So, and I want to thank the crew, everybody here. Thank you very much for making this possible, and for allowing me to do this and being able to hopefully educate the public on these financial matters. And thank you. I mean, I hope we can do 50 more. I know I'm a newbie in this because there's some individuals that have like over 1,000 shows or more. So I'm barely starting out. But let's go ahead and cut the cake, and Carolina, come on, let's all celebrate. And so thank you very much. I want to thank the crew. And we'll see you next time on another episode of Making Sense. And I wish I could share a slice of cake with all the viewing public. And please email me with any suggestions you have, and we'll see you next time. Goodbye. So let's go ahead and cut the cake. So you see that worked out?